Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we're talking trends, my friends, and moving averages and all things to do with the way stocks move on the charts. We have got the privilege of having Mr. Scott Thompson with us in the chat. He is a friend. He's actually a manager in the coaching department, also a coach. He was with us in Chicago last weekend. So if you were in Chicago, you may have had the privilege of meeting Scott. Scott was one of the coaches that when I joined this trading, found this education back in 2011, he was one of the coaches that I watched and followed and got a lot of great ideas from. So, we're privileged to have Scott with us in the chat today. So if you've got questions, like he knows all this stuff inside and out, don't hesitate to ask. And if you're not following us in the land of X, I encourage you to do so at Barb Armstrong CS. And we've got Connie Hill with us as well. Connie also a coach and teaches a lot of great classes throughout the week. So you want to, I can't tell if Connie is sticking, but whoever is with us, they'll be doing a great job. Okay, so let's get through our important information. Know that we talk about a lot of things in this class, but it's all for general information purposes only. Shouldn't be construed as a recommendation or personalized investment advice. We are going to look at a lot of individual stocks today, and we are going to place some example trades. Okay. Connie's leaving because she's teaching the next class. She's filling in for someone and teaching the next class. So stay tuned. You'll get to see Connie and her fabulous red hair soon. And when we use a stop loss order, know that it doesn't guarantee that we're going to get out at a specific price. Okay, that if a stock gaps down, we could end up out at a lower price than we were anticipating. Okay, also know that if we discuss options, they carry a high level of risk and aren't suitable for all investors. We use the Paper Money platform on the Thinkorswim desktop, and it is a brilliant place to learn. So, this is now taught in about a 9-week rotation, and usually in week 10, before we go back to the top of the heap, I throw in kind of a bonus session. So the bonus sessions in the past have included conversations on Fibonacci's. Last time we did the 8 things I wish I'd known when I got started in this world of trading and technical analysis, but we're now back to the top of the rotation. And this is week 2. So we're going to review some of the tenets of technical analysis. We're going to look at moving averages, trend types and lengths, and then we're going to spend a lot of time looking at examples. Okay. Yeah, and I am coming to you from the Salt Lake City area. It is a beautiful, brisk fall day here, currently around 55 degrees. It started out in the 40s, so we are moving on up, but hence the vest today. I went from air conditioning last week to turning my heat on for the first time this season. So when it comes to technical analysis, we know that price movement moves in trends, and it can move up, down, or sideways. And, within the context of a longer term trend, we can see, trends that move up, down, and sideways within it. Okay. And the market, in creating a trend, discounts everything. And what do I mean by that? Well, what we mean is that the current price of the stock is a representation of everything we currently know in the market about that stock. Okay. So if a merger is anticipated, that might drive a price of a stock up or down. If it's a drug company and the FDA is looking at whether or not to give it approval or not to go forward, that can have a dramatic impact on the price of the stock. Things like what's happening geopolitically with tariffs and that kind of thing. Like the market takes everything that is known about this stock and the market within which it operates. And that's how a price is derived. But, history tends to repeat itself. And somebody has said, it may not exactly repeat itself, but it rhymes. So because human beings are human beings and we tend to react similarly in similar situations, part of being human, right? And so, our trends reflect changes in supply and demand. So, at the beginning of this year, when tariffs hit hard and people were really nervous, they started selling. And so, what happened is we had an excess of supply, and that caused prices to drop because people are going, man, I'm getting out, I'm going to the sidelines. And when you have enough people doing that and everybody is selling, then people start offering less and less, or there are fewer people interested in buying. And of course, the opposite happens with an uptrend, which is what we've seen since the beginning of April, is that there's been stronger and stronger demand, and it's been driving up price. And we're seeing prices move to the upside. And supply is the number of shares available. So if everybody's holding on to their stock and they don't want to sell, you have to be willing to offer them a lot to part with it. And that's kind of a basic economic principle, right? Supply and demand. Okay. And I know that for many of you, you've been down this road before, and this is just a review. But when we have a rally, we've got high demand driving the price higher. And we've seen a lot of that on different stocks. Intel, INTC is one that we've seen this happen to lately. And then we get this equilibrium where the stock may, the purchase of the stock may slow down or pull back a bit. And what happens if you have an institutional buyer who wants to come in and take a really large position in a stock, they tend not to do it all at once. So what will happen, because it will just drive the price up so dramatically, instead, what they might do is say, okay, whoops, can you tell I was posting some stuff on X earlier? So let me just get rid of that. So they start buying, and then they stop buying and let the price kind of come back down a bit. And we call that a bull flag pattern. Where here's our flag pole, and then here's our flag. And we consider it an uptrend continuation when we have the stock, when we have a close above the high of the low day. So we're seeing that trend continuing. Some will call that a hold pattern, trader speak. And I do try and speak largely in English, but we call this a pullback or a retracement when, the price slips back down a little bit. And even within the context of an uptrend, it's not uncommon to see this. So, we let it pull back a little, or the market lets it pull back, it takes off again, and then we see another one. It is a pretty rare thing to see a stock just go straight up and never have a pullback. Okay. Okay. So when we look at an uptrend, and and I tend to be a pretty visual person. I tend to write a lot of notes, just because the writing of the note and the seeing of what I've written, helps me cement it in my brain. And so I tend to draw a lot of lines in the charts. And are any of you like that too? And it helps lead your eye, and, oops, guess I should have shaken my Etch-a-Sketch there. But, I kind of look at it and say, well, let me make this a straight line. We're seeing a series here of higher lows and also a series of higher highs, right? But then we also, whoops, didn't want to do it. Wasn't meaning to do that. And that is what characterizes an uptrend. So we're seeing this move up in kind of an uptrending channel. It gets up, and we're going to talk about support and resistance next week, but it gets up to kind of a resistance level and then pulls back, and then goes up again, pulls back, up again, and on it continues. But overall, this is an uptrend. But within the context of the uptrend, we have some short-term periods where we do see little pullbacks. And does this mean the stock is now downtrending? Well, it depends on the time frame we're looking at, right? So if we're looking at a very short-term trade or time frame, then you could say, okay, it is downtrending for this short period of time within the context of a longer term uptrend. Okay. Yeah. So when is an uptrend over? Well, if you end up having, all of a sudden it's not a higher high, it's a lower high, or it's not a higher low, it's a lower low, then, we may see, that uptrend changing. And we're going to look at some charts where you're going, well, that just looks like a dog's breakfast, um, and you can't make hide nor hair of it. Well, then you may not want to consider, you may want to consider skipping on placing a trade on that stock. So, when we look at a downtrend, we're seeing what? Lower highs and then lower lows, right? And again, getting out my little drawing tool, it's trading in this downtrending channel where every time it kind of tries to make a break for it, it comes down, and this becomes this diagonal resistance line, hits its head, rolls over again. And then where does it come down to? Well, you might say this was a support line and it came down again and again and again. And all of these low, lower, low, lower, low, lower, low, lower, low, lower, high, lower, high, lower, high, lower, high. And so this is where some people find options trading might be appealing because they might choose an option strategy that might take advantage of something that is downtrending. And we can talk about that in upcoming classes. But once you recognize the trend, then you can look into your bag of trading tools, which could include owning the stock for a short term. You might do a swing trade with it. You might want to buy and hold it for a longer term, or you might say, I'm going to use an option strategy. And what type of option strategy? Well, what if when it rolled over here, you bought a put, and when you buy a put, you benefit if the stock falls. And then when it comes down here and bounces, you sell it. And then when it comes back up here, you buy another one. And when it comes back down in the neighborhood of the support level, you sell it. Or you could do the same thing with the stock. You could buy the stock when it comes down here and bounces and sell it when it gets back up to that resistance level. Now, if you'd bought it when it bounced here, that wouldn't have worked out so well. It didn't go up very far, did it? Okay. But, so once you can identify a trend, then you can decide what you want to do with it. Okay. Now, what is this? Kind of a, what I would call a dog's breakfast, right? But when you're trying to make sense of a pattern and you look at it and you say, well, I'm seeing a series of similar lows. They're not exactly the same, but they're all kind of hanging out in the same hood, so to speak. So I'm seeing a bunch of similar lows. And then when I come up here, I've got a high, similar high. Well, this is a higher high, similar high, higher high, lower high. Like, can you make up your mind? And so this is where, you may draw your line kind of more like this. Like it's kind of trading in a range, or you may say, well, I would draw my line here. Well, you can draw your line wherever you want. Like this is the art of technical analysis. And what I would say here is it came out, tried to make a break for it, and then fell back in. And so this breakout turned out to be a fake out. And then it came back, hit its head on this resistance or ceiling again and fell, made another breakout, turned out to be a fake out, came and hit its head and rolled over. Yeah. Yeah, so yeah, somebody said, "Do I know kung fu?" Yeah. Yeah, this looks like an exercise in frustration, doesn't it? Yeah, but a sideways trend is kind of neutral. And um, when in our trading a smaller account, we've actually traded some stocks that were going sideways, quite successfully. And you could maybe buy the stock here, sell it when it got up here. Sorry, you can't see that very well. Buy the stock when it comes and bounces off the support level. Again, looking for that close above the high of the low day, might be an entry. Close above the high of the low day. So you're looking when it comes down here and bounces, whatever the low candle is, you want it to close above the high of that low candle in this pattern. And then what might your goal be? You buy it here, you sell it when it gets up near resistance. And maybe when you have what we call a close below the low of the high day. So when it hits its head and starts to roll over, close below the low of the high day. Say that 3 times fast. And do the same thing. Comes back down here, buy another, shares of stock, however many, sell it when it gets back up here. Now, if it keeps on going and doesn't roll over like it appeared to do, you could keep it in here and then say, hey, when it rolls over, then I'll exit. Okay. So just because something is going sideways, you don't, go, bah, you are dead to me. You're doing nothing. And maybe if you've owned the stock for a long time, what you could do is say, well, you know what? I really like this stock, whatever it is, because it pays a nice dividend. I inherited it from my grandma. My cost basis is, next to nothing. My cost basis is $10 a share. It's now trading in a range between 100 and 125. And so what you might do is say, okay, I don't want to sell it, but when it comes up and bonks its head here, I'm going to sell a covered call. And then when it comes back down, I'm going to buy it back. And then when it comes back up here and it rolls over, I'll sell another one. And then I'll buy it back. So, but the first thing we have to identify is what's going on in the stock. When we have a series of equal highs and equal lows, and keep in mind that this support and resistance level, they're a range, not a specific movement. And this is when, some traders might use options as a way to take advantage of a trend like this. And then when is this considered broken or over is when it breaks out above or below. And like I said, it looked like it broke out here and that breakout turned out to be a fake out. And sometimes that happens. And so a trader might say, well, I'm going to wait for it to break out and come back and then bounce. And sometimes it just keeps on going. It never comes back. And other times it comes back and it doesn't quite bounce. It falls back through the floor, and keeps on going. So there are no guarantees. What do they say? Death and taxes, right? Okay, let me close this. Now, the advantage of putting a moving average on your chart is sometimes it just leads the eye. And so it can help identify a trend and it just kind of helps smooth things out. Now, when you have a faster moving average, what do we even mean when we say a faster moving average? Well, a faster moving average might be a 10-day moving average, and a slower moving average might be a 100-day moving average. And so, we say that this is kind of a slower moving average, but it's going to be a lagging indicator because it's taking 100 days worth of information to create that line as opposed to 10. And so I have a 10 and 100 and a 30 on my chart, and you'll see that. Yeah. And then you want to look at time frames as well. So we consider something longer term if it's more than a year. Intermediate is kind of 3 months to a year. Short term, typically less than 3 months. And so if you want to do a bunch of short-term trades, and yesterday in trading a smaller account, we put on 3 trades, and I learned this strategy from Mr. Scott Thompson, actually, where our target is the amount the stock moves in an average day, which is called average true range. So our target is for it to move up. It might be $1 depending on the price of the stock, or it might be $2, or it might be $7, but it's a very short-term target. So within this context, if we were buying it when it bounced off here, if in fact it gapped up the next day, we might have only been in that trade for 1 day. But the goal is just for a little move to the upside. And you can do the same thing using options to the downside. So that's looking at a very short-term trend within a longer-term trend or an intermediate-term trend. So, if you're looking to generate income, I said, let's pretend we want to go to Disneyland, for Christmas or something, and we want the money now. So we're doing a short-term trade, but so we're seeing here a longer-term trend, an intermediate-term trend, and then even within that, we can have some short-term moves. So you want to trade with the trend that matches your objective. Okay. And sometimes people also want to trade within the context of the larger trend. So they would think that, so if the longer term trend is uptrending, you might say, well, then I'd rather trade this part of the curve than this, because this is going with the flow of the longer term trend. Here, it may be a short term trend, but it's counter to the longer term trend. Does that make sense? Capiche? Okay. So now comes the fun part. Let's go out and look at some stocks. And I want you guys to just type in, what kind of trend are you seeing here? So here's the S&P 500, chart number 1. So we had, and this blue line is a 10-day moving average. Our red line is a 30-day moving average. And the black line is 100. Now, how do I know that? Well, if you come up here on the chart, and this was something, it's kind of a blinding glimpse of the obvious once you see it, but it says in red here, simple moving average 30. And yes, and that's what's causing these little arrows. It means tell me when it crosses the stock crosses above or closes above or below the line. Then we see this simple moving average 10 days, and it's in blue. So the 10 is a simple moving average, a 10-day simple moving average. And then the black is the 100. And you can see that the black isn't moving nearly as much, is it? Because it's incorporating 100 days worth of information. But a lot of people will take this as a serious signal when a stock closes below the 100-day moving average, and then again when it crosses back above. And we can see that, when I said it's lagging, well, it crossed above the 10-day moving average here, and then it pulled back below, and then it crossed again here. And then with the 30-day moving average, it crossed that line here. Okay, and has stayed above it ever since this date. But the 100-day moving average, this is what I mean by lagging. It didn't get there until here. That was in May sometime, beginning of May. This bottom was hit on the 7th of April. And so, and again, it just depends on, and some might say, well, it's crossed, but I'm going to wait for it to come back and retest, which it did right here, and then it bounced. So somebody said, well, I'm going to wait till this day. And you know, if you had waited until this day and you wanted to, you know, buy something that represents this index, you would have done a bit of all right, wouldn't you? You would have. But this uptrend, right? Greg is right. So Greg is asking how to place the arrows on the MACD. And I do have a MACD here, and you see these arrows. So let's go and I'll show you how to do that. So if you come to your studies and edit studies, you can see here my simple moving average. And so let's look at that first. So when I hit the sprocket, the default is not to show breakout signals. So if you want it to show the arrows of when it closes above and below the line, you have to put that in there. So I said yes for the 30-day moving average. And one of the things that we did in this class was we created a simple stock investing plan using the arrows crossing both on the 30-day moving average and on the MACD. So then we came down to this MACD histogram. And again, there's a little spot here. It says, do you want to show breakout signals? And if I say no and hit OK and apply, then you'll see those little arrows are gone. And then if I just come back in to my MACD, hit the sprocket if you want to change it, show breakout signals. Yes, please. Okay, apply and okay. And now you'll see these as it crosses the center line. And the MACD is a momentum indicator, what we call a momentum indicator. You know, so we can see here, for example, that we crossed the 30-day moving average on this date. And you know, in this particular case, this wasn't lagging, but sometimes the MACD will lag. In that it takes an extra day or two to get that green arrow here on the MACD. Okay, but that's an uptrend. How about the NASDAQ? How would you characterize that trend? You know, it's pretty uptrending, isn't it? Like year to date, this index is up 17%. And we did have a period of time where it was downtrending, where it was below the 100, it was below the 30, it even was below the 10-day moving average. And I think all of us remember, you know, February and March, it was pretty sobering, wasn't it? Yeah, and then Jay, you know, after April 7th, things turned around. And you know, we've kissed the 30-day moving average a couple of times since it crossed it back here on April 24th. But you know, when it took off like a rocket. It didn't even come back and kiss the 30-day until almost the end of June, and then closed below for one day in August, and for another couple of days, you know, one August 20th, and then September 2nd, and it's back above, well above the 100, the 30, and the 10. So hard to characterize that as anything other than bullish, right? Right. Okay, so let's look at another stock. MSTR. So this is MicroStrategy. And, you know, what do you make of this? And, you know, you kind of look at it and go, whew, that's kind of a lot. I don't know what to make of it. And, you know, really, like this has, it kind of consolidated here. So it was trading in a range, and then it started up trending. And, you know, and now, like if we look at, again, if we get rid of this line and we say, but, you know, of late, what's going on? What I'm seeing, and you want to hit as many lines as you can. So I'm seeing this downtrending range. So if I duplicate this drawing, and it tried to break out and it's coming back and it looks like it's going to retest. And when something's trading in a range, it will often weave back and forth between the moving averages, which is what we've seen it do with the 10-day. But, since the end of July, it's really been trading below the 30-day until this breakout. So we'll have to see, if this holds. So sometimes these aren't super clear. Okay. Let's look at Lulu. Well, third time's the charm. Hey, how would we characterize this one? So, spoiler alert, if we look here at the year-to-date change, it is down 54%. And it went from a high back at the end of January, a 423, down to 159 recently here on September 15th. So that's more than a 50% drop. And in fact, it is down almost 55% year to date. But when we look at this 100-day moving average, it kind of crossed below that. And again, lagging indicator, it crossed below the 10-day first, then the 30, then the 100. So somebody's saying, should you have arrows on only one moving average, or can you have them on more than one? You can do whatever you like. I just put arrows on the 30 because we were creating a short-term kind of growth investing strategy. And so we were using that. And then, let's look at a 2-year chart on Lulu and kind of walk through. So, this stock had kind of come up around and crossed that 30-day moving average. And let's say you were a short-term investor and said, well, I'd like to buy Lulu. I wear Lulu products. I don't actually, but let's just say I did. And I believe in the company. And so we buy some stock. And the deal that we have is if it closes below the 30-day moving average, we tighten up our stop. So if we bought it here, we might have tightened up our stop here to maybe 3% below. So something, around the 240 mark. And then, we would have just still been in this position. And then it went up again and closed. And so if we said, okay, well, now we're going to move our stop to 3% below that. So maybe our stop now is around 255 from 240. And then it, again, and we look at if this is a higher number, we'd move our stop to 3% below that. And then it keeps. And so what we're trying to do is manage the potential damage. And then it kind of takes off. So when did we first get in? What was the price? Around 263. So, in our stops here, if our low on this was 259, our stop is still below what we paid for the stock, but we're trying to define our risk. And now the stock is trading over 230. So we have a nice profit, but what kind of profit is it? It's an unrealized profit. So when it comes up here, we're going to take our stop and say, okay, the low here is 298. We're going to go 3% below that. So now we've moved up our stop again. And, and if you're looking for a way, how do I prevent myself from starting to be hopeful when a stock pulls back and not getting out when I should? Well, if you have this plan and you look at it every day or once a week or however often you manage your positions, you would just say, hey, we had this red arrow. I'm moving my stop up because that's my trading plan and those are my rules. And then it continues to go up. Oops. We get a red arrow here. Now it's at 374. We bought in at 263. So we're going to go 3% below that. So 374 times 0.97. Our stop's going to be around 362. And it's kind of hovering. It's kind of hovering. And it starts going up again. Now where are we? Where the low on this day is 390. And so we'd move our stop up again to 378. But now what we're attempting to do is protect about $100 worth of profit, right? What did I say? 378. What was the low this day? 365. So we're out the next day and we might go, oh, snap. Now it looks like it's going to turn around. Well, let's see what happened. And what might your rule be? Your rule might be, well, if it goes back above that 30-day moving average and then it comes back to retest. So we would have been out at 378. Now where is it trading? 260. Are we like about throwing our shoulders out for patting ourselves on the back? Yeah. And so we can see, you know, that would have worked out in our favor. And if we'd gotten in again, we would have employed the same rules. And here we would have, if we were back in here, you know, we would have been back out probably on this day or this day. We might have lost a little bit, but overall on this stock, you know, we would have been up. And would we be back in? No, you might love Lulu, but you're still waiting. And, you know, there isn't a sign that this downtrend is complete yet. And so that's how we can use trend and changes in trend and how we can manage our expectations. So let's come and look at another one, Celsius. So here's one, you know, came up to 99 all the way down to $20, Celsius Holdings. This is a 2-year chart. But, you know, what's been going on lately? So if we look at a year to date, you know, all of a sudden this thing crossed our 30-day moving average, and we had placed a trade in one of our example accounts, and, you know, it really took off, didn't it? And then we've had this short-term pullback. Now, if you had put a stop, adjusted your stop here at 56.03, you know, would you have ended up out? You would have. Times 0.97. 54.30 would have been your exit. And the low here was 51.05. So you would have ended up out probably on this day. You might have ended up, you would have actually ended up out this day, the next day. And then what would you have done? Well, if your rules say, I'm going to wait, so you're out on this day, you've earned a nice profit, and then what do? You wait. And you might say, well, is that a taxable event? Well, it depends on what account you have it in, one, and how long you've held the stock. And I'm not a tax person, so talk to your accountant about that. And you might say, well, I don't care if it goes down. You know, I want to stay in. But, you know, watch when you say that, because if we look at something like Peloton and we come back and we look at, you know, a 5-year chart, this went from $171 down to $270. Do you really want to ride that train? I don't think so. And so, you know, but if we look at Celsius now, and you might say, well, we've missed the move. Well, you know, not necessarily. Who knows where this might go? This looks like a pretty solid uptrend to me. And we had this pullback, but it's now crossed the 30-day moving average and is moving on up. And so if we wanted to add this to our portfolio, where might we put a stop? Well, we might say, I want to really give it some room. And so I'm going to put my stop before this recent low. You know, so if I buy it here, and we can move our stop up, like we just discussed when and how we would do that. So we might say, okay, I'm going to put my stop below this 50.62. And so we're taking more risk, but then the odds of being stopped out, the probabilities of being stopped out are much lower. So if we take this recent low here at 50.80 times 0.97, our stop would be at 49.27. And so how much risk are we taking? We're taking about, you know, $10.50 worth of risk. And you might say, well, there's just no way. I'm not willing to do that. But if you come to the trade tab and anything is possible, if our stop is just below this 50 mark between now and November 21st, this is saying, you know, the delta is 17. This is how much is, you know, the stock's value will, you know, this option will go down in value. But what this is saying is you've got a 45% chance of it coming and touching it at 50. You know, so this is a very volatile stock, you know, but the closer your stop is to where the stock is currently trading, the higher the probability of being stopped out. So if we wanted to add this to our portfolio, and we're going to just add, this is a big account. I'm not going to go through the whole position sizing exercise, but we're going to add just a couple hundred shares because we can take about a $25,000 position, and then we're going to put our stop at 49.27. And then we can come back next week and look at, you know, should we move that stop up? We're going to put that in our growth stock group. Okay. And so what I encourage you to do is go through and look at a few more charts. Like look at a chart and say, okay, is that uptrending? How do I determine an uptrend? Well, is it trading, you know, are we seeing a series of higher highs and higher lows? If I have a trend line, is it trading above it or below it? Or is it kind of going sideways and crossing back and forth through it? And so, you know, I encourage you to just kind of start training your eye. You know, again, is it above or below our moving averages? You know, are we seeing higher highs or are we seeing lower highs? And there's lots of examples out there like STZ, you know, so, you know, we can see things moving in both directions. And one day of movement does not a change in trend make, typically. So guys, that's a wrap for this class. I appreciate you joining me today. We did the one example trade on Celsius, CELH, and we added that to our portfolio, our example portfolio. There is a survey in the chat. And so I encourage you to take a minute and fill that out. Two whopping questions. So 1 means I hated it, 10 means I loved it, and then you've got everything in between. And then there's the ability to put comments in. So if there are topics you would like to see me cover in upcoming classes, just type that in. Let me know. Do you like the pace? Would you like me to see more examples or fewer? That kind of thing. And my promise to you is if you fill it out, I'll read each and every comment. If you hit the like button, it helps move things up in the trading algorithms on YouTube so that more people will get exposed to this content. So you could be doing a favor for a random stranger just by hitting the like button. It also lets Scott and I know that you found this valuable. And then if you haven't subscribed to the channel, you'll want to hit that subscribe button. Somebody just asked in the chat, like, how do I make your chart look like mine? And if you go to the Trader Talks from Schwab Coaching, so just type in Trader Talks. I obviously come here fairly frequently. What you'll see when you first get here is what's currently being taught. And then if you come to playlists and scroll down to trade management mini sessions, I created several groups. So this is part of the technical analysis series, some quickies on candlestick patterns. They're all under 5 minutes long. But if you come down to the very bottom, I did a bunch of short videos on Thinkorswim. So how to place a one cancels the other order. And here's one on how to customize a chart. There's one on how to customize a watch list in your monitor tab. So you can do some binge learning. Yeah. So guys, that's a wrap. Thank you for joining me. Have a really awesome day. Coming up next is Connie Hill, I believe, with long options, or might be swing trading. In any event, stay tuned. There's lots of great content still to come your way. Bye for now.